All right. Good morning. Good morning, everybody. So it continues. We still have no trigger for a short. A lot of bricks in the wall of worry. Um, More leaders are talking to Japan. So global leaders are really focused in that direction. It continues to be one of the biggest, quiet, subtle, most dangerous pieces to the global financial system at the moment. And it's what you should be watching above everything else. What's going on in Japan? Europe's down the most. US and Asia are basically flat. We've got Michelle Bowman on TV, and then she's going to moderate this banking conference that Powell is going to give opening remarks for. Uh, Not really expecting anything out of that, right? It's not a policy meeting or anything like that. Still, if there's going to be a lot of reporters here and open mic and they get talking and asking questions, there's always room for things to go wrong. So just kind of keep your eye on the headlines. He can be misquoted, taken out of context, get caught with a hot mic. We've seen all of that before, right? So yeah, tread lightly. Otherwise, we're not really expecting much out of anything. The number's a little wide on the Richmond Fed Manufacturing Index, but it's coming in. So, not necessarily a bad thing unless it doesn't, right? That could cause some angst. Otherwise, we got the 20-year tomorrow, and I'm much more interested in that than anything that we have going on today. Who knows? What would be really wild? Powell is going to speak today. He could bow his head, right? Everybody's got a breaking point. Whoa, the markets would react on that one, right? That would be, we'll see. General Motors, you know, these CEOs a lot of times have more influence than they give in credit for. And if you've ever read my morning briefing blog post, the one where I kind of lay out things to do and things to keep your eye on, some of the CEOs are worth stalking, right? Get their Twitter accounts, keep track of them on social media. And the CEOs of General Motor and Ford, while, they're no Jamie Dimon, right? They are worth keeping an eye on. General Motors had a lot to say at their earnings this morning. So, circle back, hear what he had to say, and listen to what analysts are talking about now, because we're still looking for cracks in the economy after all of these tariffs, right? They kept saying, oh, the tariffs are going to be so bad and it's just going to destroy the economy and the market's going to crash and burn. And really, after capitulation on the 9th of April, we've just run all the way back up into new all time highs. And most of the companies that we've seen do earnings have either just avoided the situation or have said, we're not seeing it yet. We're pricing it in because we're worried about it, but we're really just not feeling it. Well, GM is feeling it, and they've shared that point of view this morning. Could be the start of something more. So we got the 10-year kind of confused, giving us this little bump back up. That's a Busby, all things considered, right? Defining the range would say, it depends on where you define the range. But either way, we could look at it as a little bit of a bear flag or a bear pennant, I suppose. This would be more of a flag here on the dollar. But you can see how the dollar's headed back down again, right? It really wants to continue that move to the downside, while the 10-year, it's not so sure, headed back towards that 4.4. We are in uncertain times, but I stopped my mouse right here on the ES, which is the far right chart, at that pivot point across the high where we turn and we start to fall. And if you look to the chart on the far left, it's the 10-year. And where my mouse synchronizes over there, it's 11 a.m. yesterday, and it was the turning point at 4.35% in the 10-year. So the 10-year had this wild drop that started around midnight, while the ES pushed to the upside. The ES peaked out, rolled over, the 10-year bottomed out and shot upward. So, when you're trying to figure out what's going on right now, what should I be watching? The 10-year, the dollar, the Japan JGB 10-year, the 30-year, bonds, treasuries, right? They are really influential right now, and it is not like the VIX. The VIX is pretty simple, right? Because the VIX is almost always going to be opposite of what the market is doing. So you don't have to reevaluate, right? If the VIX starts getting wild and moving to the upside, you got a pretty good idea what that implies. But with the dollar and the 10-year, it's not always the same. Some years, a falling dollar or a falling 10-year is going to help the market, and other years, seeing those fall are going to hurt the market. So you can't take it on default that having them move in one way or the other is going to help or hurt. So you can just start by doing what I'm doing here, finding a turning point and matching that up with a market, whether it's the NASDAQ, the S&P, whatever, and look at where that turning point sent the market in question. So if we continue to see the 10-year move up off of this exaggerated low, it's not, the biggest low we've had, but that's pretty extreme how fast we got there. Rate of change is a big deal when it comes to treasuries and bonds and dollar, and we don't want big wild swinging moves in there. If we continue to drive back up, we could anticipate more weakness in the ES, but you can see that they're not lockstep in perfect, right? For every tick that we move in one direction on the 10-year, we're not getting an equal and opposite move in the ES. But we are seeing a negative pressure with the 10-year rising. So at least for today, or until that changes, that's what you're going to want to keep as your expectation. 10 years pushing up off of that pivotal low, and the ES is fading off of that high. So if that changes, that should change. Showed this morning. It's worth talking about for a moment. This is a daily chart of the ES. It's the range that I had marked out last week. And we have the breakout of the range. Yay, finally. So if we use OCR style analysis, which is really, it's really new and not a lot of people know it. It's like anything else, it's the more you use it, the more you understand it. We've got these higher highs. And after we came down and tested the 10 and we got back above this 4-period moving average, we've had these higher lows as well. So 3 higher highs, 3 higher lows, that's a set, right? We need 2 of each to have a trend. this is a trend within that time frame. Like if I went down to a 2-hour or a 1 hour, but today doesn't count yet. Today's not done. We needed a daily close to define a daily candle. But we're testing that for, and if we break below yesterday's low, then we won't have a higher high today. We'll have, we won't have a higher low. We'll have a lower low. So if we break, all we got to do is just wick down there. We don't have to close down there. We don't have to continue to go lower. All we have to do is break that some point today, and we will have a lower low using OCR. Same thing with the high. If we don't break that high today, then we're not going to get another higher high. We'll end up with a lower high. The midpoint of yesterday, 63.50. It says 51.88. We can't go to 88 on the ES. So, you can round that up to 63.52. I like to use options levels, so I just say it's 63.50. But that midpoint right now is the line in the sand that we need to get through. And so far, that midpoint is today's high, 63.52. We got to get above that midpoint. It is the default resistance that we're dealing with today. Now, if you've learned to read wicks, right, then you can define all of this activity above 63.50 for the last 3 days as selling pressure. Are they done yet? We don't know, right? Certainly can't tell it from here. We could go back and define it through a volume profile and order flow and look at the queue in a replay and see how they were positioning and pulling and stacking and responding at that level. But something generic like this on a daily chart, we can just look at what we have. We can't say that they're done yet. If they're not done and we continue to test that level and continue to fail to get through it, well, eventually they will wash their hands of it. General tactic is that they'll back up and make a run at it, or they'll just completely back off of it, right? They'll back completely away from it, say a retest of the 20, and then try again, which would give them like another OPEX, another 20 plus days, right? Kick the can down the road and look to do it later in the option cycle. But for today, it's really clear we've got to get above the midpoint of yesterday. It is the single absolute focus. We have to get through that first. And if we can, then we'll focus on yesterday's high and setting that higher high. When it comes to IX10 and inside days or inside bars, you'll find some analysts that are really picky about this. And if they get any wick at all outside of the range, then they say that the range is broken. I'm not that bad. Wicks don't bother me. Right? It's fine. It's fine. What really starts to call into question if we're still inside a range are closing levels. And we closed outside of this range. So the IX10 is done. Right? It was done as soon as it started. If it was just 1 week inside of the previous week, well, then that's just an inside week, and that's those 2 bars. It became an IX10 when we had the 3rd week. Problem is that week wasn't closed, and so it didn't count as IX10 until the week finally did end, and the week ended outside of that range. So it never became an IX10. It was still just an inside week. The reason it matters is 63.32 cog line defined that range from the beginning of all of this, and that is the channel 32 to 50, 63.32 cog line to 63.50 or 63.52 if you want it, to land right on the midpoint of yesterday. That's what we've got to deal with. It's a much tighter range, right? We're talking 20 points now rather than 100 points that we have been dealing with over the course of the last few weeks. They rolled the call wall down, not a lot, but the call wall did get rolled. So it's a bit like putting I don't want to say a ceiling on it, it's not quite right. Throwing a wet towel on a piece of coal dampens the fire a little bit. If I could tell everyone what to do with their trades, I don't know that I would tell them that. Yeah, Pal should tell him that. What if he does just, he has been known to get a little rowdy, right? Remember that Jackson Hole in 2022 when we were in that bear market and everybody was just hand wringing and and he did that mic drop moment, like suck it up, kids. Yeah, he did. And he walked off the stage. It was supposed to be like a 15-20 minute speech, and he was done in a minute and a half. The market's freaked out. So I'm telling you, he's got some backbone and some fire in him. And at what point is he going to break? And when he breaks, what's he going to do? You can only kick a dog so many times, no matter how nice that dog is, before it bites you. So overnight volume sitting at around 60,000. We did have more participation than yesterday, which came in a bit light. They didn't get a lot done, all things considered, right? We had a really tight IB, or initial balance, and then we began to expand out of it. We're still seeing a lot of new trading coming in between, say, midnight and 2 a.m. It's not Asian trading and it's not European trading, right? It's something else. And I've pointed it out last week. We're continuing to see it now this week. But this move started early, right? This move started in Japan. Then, it had that little push up into the European session. And then we ran up now and got the gap close from that session, from that volatility. It's like a liquidity gap. So now what? Yeah. Just sitting in our range, waiting for the next trigger. This white line that you see here, that's the 4-period daily moving average. And if we break that, the 10 is next. That's just, the way it goes. It's like what happens after the sun rises, it goes down. That's just the order of things. It's the way it works. Break the 4, you're going to the 10. Like back here, we broke the 4, we went to the 10, right? Broke the 4, we went to the 10. It's not by default. You can see back here, we broke the 4 multiple times and we didn't get to the 10 on those days. But if we continue to move in the same direction, right? If we break down and continue to break down, where are we headed? That's the goal. That's the target, to the 10. Gives you a way to price your risk. We are getting closer to the 0 gamma line. It's like, we pay so much attention to the call wall and the put wall that the subtle little things like the volatility trigger and 0 gamma, well, they're just moving around in the shadows when we're not looking. 6,300 basically is the 0 gamma line. Below that, dealers will be net negative rather than net positive, and they will respond differently to breakouts and breakdowns. Now, look, it's not to the penny perfect that when we get down to 62.97 that they will immediately start acting different. That's just not the way it is, right? But they're going to change their approach to how they are hedging all of the things that they're holding. And the farther south we get underneath 0 gamma, the more that behavior will increase, right? all the way down into the put wall where puts get monetized. We do have a little bit of a TRB forming this morning too, by the way, right? But it's kind of ugly and not there yet. Looking at the ADR lines, the upper ADR lines up really nice with yesterday's high. So, usually it's above it or below it, and we can either hit it or we need a breakout. Today it is yesterday's high. Okay, we can deal with that. The low is completely outside of yesterday's range. We're going to need a breakout to get to it. That's just the way it is. We got to have the breakout. And at this point, we're flat. We've done nothing. So we have no edge one direction or another towards hitting either one of these. Much like yesterday, we need a catalyst, right? We just need something to fire this market off. And everything that I keep looking at on the table this week does not compare to what we have on the table next week. QRA, FOMC, and tariff deadline, all next week. There is nothing on the agenda this week that comes even close to that. And then I hear on Bloomberg, they're just pumping the market like crazy, right? They may as well just be pump and dump. They're talking about how BlackRock and they named off 6 different firms are all buying the market, buying equities like crazy, and how it's a buying frenzy. And they can lie all they want to, right? Because most people aren't going to check them on it. Remember, they will talk their portfolio more than they will try to guide you or assist you. And if BlackRock and all those others are saying that they're buying like crazy, then you should take that with an absolute grain of salt. Check the CTAs, check what they're buying, right? Check the ETF flows. Don't listen to the bobbing heads on TV when they say buying the market like crazy and that the projection for the next quarter is to continue the buying pace. Yeah, okay. A lot of those funds were calling the market as a short all the way up through this bounce. Remember, they were saying, oh, it's just a bear market bounce. It's still just a bear market bounce. They said that to 55, 57, 59. Oh, it's just a really violent bear market bounce. And then when we finally got above 6,000, a lot of those analysts decided, you know what, this kind of feels like it's bullish again. Really? So watch the money flow, right? Trust what they did, not what they said. Today's floor pivot is higher than yesterday. That's bullish. Price opened underneath it. That's bearish. Those two things kind of cancel each other out. It is a narrow channel again today, like yesterday, but it's not as narrow as it could be. And since it's not as narrow as it could be, breakouts, this implies, likely don't stick and we come back in again. Much like yesterday, we had a wider channel, or wider than today's. We had a wide channel, it broke out, it didn't stick, we came back in. Now, yesterday's wasn't as wide as, say, Friday's was, which also broke out, didn't stick, and we came back in. These channels do not make price do anything, right? They don't make us break out. They don't stop us from breaking out. They don't make us come back in. They just give us insight on what to expect if we do break out or if we don't break out. Our distance from the 10-week or the weekly pivot was not extreme, so this reversal had nothing to do with that distance. But I would continue to keep an eye on where that weekly floor pivot is if we get a breakout of yesterday's high, because we do want to monitor the distance to the weekly floor pivot. Otherwise, from an intraday OCR, we're setting lower highs and lower lows, and that is target right now, 63.11 cog line. which is the weekly floor pivot on this intraday. We did make it to R2 yesterday, right? We were talking about R1 in the pre-market and how if you get to R1 and then you run away from that, or roll away, I guess that roll is a better word. You roll away from that level, that you could get to S2 by the end of the day. Well, we stalled out on the pivot channel, and then we had that exaggerated move back up into R2. So we made it past R1 and overshot into R2. These levels matter, right? Did we know it was going to stop right there? No, but we knew that if we got above R1, we're very likely going to R2. And then, how we respond to R2 matters. So it gives context, right? This is not some secret proprietary indicator. This thing's been around 35 years, and it's an open math formula that, is taught in every pivot book I've ever ran across. So turn on the pivot points once in a while, right? I don't leave them on all day because they're loud, noisy indicators, but you can just mark the level, or at least write it down on the notepad, so that, if we get above R1, you got a pretty good idea where R2 is. For today, we're closer to S1. So if we keep fading, then S1 is in play. 63.27.5. We would have to break the weekly floor pivot to get to S2, which is 63.06. If we can get back above the daily floor pivot, then 63.71, let's just call it 72, which lines up really close with today's ADR and really close to yesterday's highest point. That's like a triple resistance level right there. Yesterday's high, today's ADR, R1 on a floor pivot. Getting through that level would be really hard to do. Not to say that we can't do it, but the headline that we would need to make that drive would be obvious to everybody, right? Like, there's still people asking me, what the heck was that move yesterday? What caused that? Whatever gets us through this level today, it won't be that subtle. You won't have to ask, like, what the heck was that? You'll know, right? Whatever it is, it would have to be something really good. So if you're looking for options levels to sell against today, that'd be a really good level to sell against. Me personally, I'd rather sell against it after price got there, so I could do something at the money or near the money, rather than doing it when we're still below 63.50, right? Just the way I do it. It's a really ugly profile this week. It's like chewed up bubble gum. I'm sure that's straight out of the textbooks too. If you go to the volume profile textbook, they'll just, yeah, that's not what they call it, but it does look like trash. You don't have a single distribution. You don't even have a normal. You don't even have a normal distribution, like your classic D shape. Nothing. So the one thing that really stands out is all that effort that came in across that high. When we were asking the question, is there still a lot of sell side pressure up there, or are they done? This implies they ain't even gotten started, and that they are still up there, and they are willing to continue to define and defend that level, which, kind of bodes well for the discussion of yesterday's high and trying to get outside of that level too, right? $63.74 is, we'll see the front running according to this. So if we make a break for yesterday's high. 63.74 is yesterday's high, and that said 63.68 area. So the volume profile on the week, they're going to be front running yesterday's high. Should see it, right? We'll take it. Take everything we can get, give nothing back. So if they don't front run it, that should give you a bit of a cautionary tale when we get into that triple level, if we can get in there at all. Right? Yeah, they put a lot of work in yesterday. 10-day, 30-minute volume profile in TPO. We don't have a classic shape yet here. And we've got a bit of a discrepancy between the TPO and the volume profile. We can see how these high volume nodes are lower and lower and lower. But if you look at the TPO, it's low, higher, equal. Well, really close to equal. Maybe a little lower, right? But it went higher out and then almost an equal, whereas this just kept getting lower and lower and lower. So discrepancy, right? They're not matching up. And then the distribution along the bottom side here, I mean, that continues to stand out really wide here and much thinner here. It just kept fading out here too. We didn't get a chance to test that low of Friday, but it's the value area high. And that gets us back in the box. 63.32 cog line, which, hey, we heard that level multiple times today. If we get back down below that, I think it's game on back to the point of control. That gets us underneath 6,300. And then we can start working on zero gamma and put wall and all that stuff that's below us. We have a new VPOC defined from yesterday. Now I'm going to set mine on the round number just because a lot of times these don't line up really well. And I'd rather not fight it. So if you want to get more specific, then you can scroll your chart down and squint at this thing from, you know, a tick chart or something. But it's close enough for me. So 63.69-ish, yesterday's point of control. If we get into that level today, we're likely going to feel it. I would say that it lines up with the week so far because that makes sense, right? It's what we were looking at on that weekly profile. And it's the front run for that previous day's high. So we're going to have to get through that level if we're going to get an inside day breakout on the upside. The TradingView volume profile will actually draw that level forward for you, which is nice. You don't have to go in and hand draw it every day. I think I had one on Thinkorswim that would do it, but there was an error to it. I don't remember what the error was. And I don't know. I think it's kind of noisy. I'd rather just draw it by hand so I could turn it off and on when I want. All right, this is the SPX. I'm not going to stay on this one, but it is worth noting. So I pointed it out yesterday, right? How we get that close and then the gap up and the fall. So it's those loops that I like to draw. And then we had, you know, a gap up here and a big loop, just really didn't get us much. But we had another one where we closed here, opened here, not much of a loop either, and down we went. And then we had that. Classic. I mean, just straight out of the textbooks. And it doesn't bode well for the week. So right now we're holding above that gray line. The gray line is Friday's close. This week's range, we've already talked about it. Um, we can get to the edge of a week's range in a single day. We can open up on Sunday night, and by Monday close, we could be sitting on one edge or the other. I've seen it before, to where you get the whole week's move in a single day. Last Monday, for an example, we got really close in a single day, right? So it can happen. But then you get weeks like last week and this week where we're really just not doing anything yet. Market expansion and contraction 101, right? Simple market logic. If what we're doing is what you don't want, just wait on it and you'll get the other one. We've been sideways, 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 sideways. The sideways isn't going to last forever. We will come out of this range. Now, you can try to play the Ouija board and crystal ball and guess which way we're going to go, or you can wait for the break. And if you want to use options, you can just straight up play the move even before we get the move. If you want to take that route. As long as you can define your risk and keep it small. We're still above the 10-day. We're still sitting in the zone. This is healthy. It's safe. It's fine. There's nothing here to see that we didn't already know. And there's no risk at this point looking at that. We're not overbought, overextended, overdrawn, or nothing. Looking at the 10-week, 3.25%. We're still just making our way back after getting a bit extreme. And we're working our way back in a nice, calm, orderly fashion. It's not like somebody pulled the fire alarm in a crowded theater. It's just nice and easy. And that's exactly what we want to see. So no drama, nothing to see here. Everything's fine. We're a bit stretched above the 10-week, but nothing bad at all. And it doesn't owe us any sort of mean reversion at this point, which makes sense because we've been going sideways and we haven't done anything since that exaggerated run that we had back here, where we got a little bit ahead of our skis and now we've just been correcting sideways. This is a correction in time rather than a correction in price. That's all it is. We are correcting. And we're doing it really well. But the clock is ticking, and I think that next week is the end of all of this. It's where the calm finally ends. I always did like that meme. Yeah, the 8-ball one. You got to find the one where it's the skeleton shaking the 8-ball. That one's funny. Anyways, saw a squirrel, something shiny. All right, looking at things that are down this morning. Chips are down. We're going to feel that. That absolutely needs to change. Hard to see us get a rally day with chips down. Now, just because it says we can't get a rally day doesn't mean we're going to sell off today, right? There's two completely different things. Not going higher doesn't mean going lower. So just kind of keep that in mind. But chips are down. So, and over a 5-day period, chips are flat. If you think about basketball, football, whatever, pick your devil. Start in the center of the court or in the middle of the field. With SMH flat over a 5-day period, it's in the center of the court. We could see this thing move. I don't know what its ADR is, but we could double that ADR in a single shot, since we're back to the center of the field. I should put ADR on here. It is on there. There. SMH ADR 4.32. 1.5%. So it can make a 3% move today. No problem. Easy. Looking at what's up this morning. What's up? Bitcoin and more Bitcoin and more Bitcoin. the top three on the list today are Bitcoin and then China, solar, and China again. The VIX is up a little bit, probably just confused. Oddly enough, the Mag 7 is up this morning with chips down, so could be getting a little bit of love out of consumer discretionary or something like that. It says it's up, but it seems a little confused, doesn't it? So in nat gas, pot stocks, uranium, chips, crude, airlines, all down. Tech is down, but not enough. Gold also down, not enough. Energy, building materials, exploration, they're all down, just not enough. And then looking at things that are up, Bitcoin, solar, biotech, financials, just not enough. So it's wishy-washy, and we don't have the sectors that we would need for a breakout rally day. We don't have the sectors that we would need for a down day. Something's got to give, right? We're still looking for that catalyst. And it's really hard to see them trying to position right in front of all of this risk that we have next week. Why would they, right? I mean, think about it. You're going to go in and position millions and millions of dollars right in front of FOMC and QRA with what's going on with Japan too. I don't see it, right? I would expect instead that they run some short-term money flows just because going to cash costs them so much. They're not going to go to cash. They'll go to something else for the short term, and they'll just play hot potato or whatever that musical chairs until next week. So look for money flows to just jump into other things, right? The stuff that's been beat down, left for dead, things that nobody's looking at, and it's probably, pretty cheap with not a lot of options flows on it. They'll just pile into something else, get out of the crowded trades and wait on all of the stuff that we have on the table next week, QRA, FOMC, and the tariffs. For today, just getting away from that bigger picture and kind of bringing it back home, we've got a really simple day, right? Yeah, GoPro. Yeah, it's like it is what about BlackBerry? And you know what I mean? If you got a GoPro, or what's the other one, the travel one, Magellan or TomTom, some other generic old school tech, like Dell's always. I'm not that old. Come on. 50 is not old. So pretty simple day. GTFO, get out of our Globex high for a shot at yesterday's high, which is a high on the week, or break our own Globex low to challenge Friday's low and begin the move to the downside. There's a lot of structure up here. Weekly pivot, daily pivot. I say pivot, but I meant point of control. The ADR. So we can get through there. Just keep that in mind. It is possible. It would just take something really good to get us to break that level. And the base case argument, just like yesterday was, the base case argument is that we go sideways and that we don't really break down that much. And we don't really break out that much. And if you look at where we closed, we did get the breakout yesterday, right? But look at where we closed. We didn't keep it. So, a number of people reached out yesterday and was like, I thought you said it was going to be a sideways day. I mean, that's the base case argument. It comes down to what's more likely, that we expand from here or we go sideways today. Yesterday was what's more likely, that we go sideways. And by the end of the day, we were sideways. Certainly didn't see the headlines that brought that move coming, right? You can't anticipate a headline. So we expanded farther than was expected, but we still came in by the end of the day. So do the same thing today. Take yesterday's highest point and yesterday's lowest point. That's your new level to get through and keep it. Base case is that we don't, that we'll turn around on 111 or 1236 on either side. And I say either side, but make no mistake, we can go to both sides today. I know newer traders don't really think that way, but that's just the way it goes, right? We can go to both sides by the end of the day. That's what I got for you guys. Be careful, be safe, watch the clock. I'll see y'all tomorrow.